They have had $4.5 million in payouts, and they hold the single biggest record for a prop firm payout of $2.5 million.
I saw Trader Kane hit a $2 million payout, and I said, you know, I can do this too. All of that experience have led up to some really big payouts, and I think is a big reason why I'm in the position I am today. Because
today's guest is Kyle, better known as Jadecap. He's done over $4.5 million in payouts with a world record $2.5 million in a single payout alone.
First 5-10 years, I was strategy hopping, trying to work on my risk management and everything. When you start diving into psychology, those are the hard things to address. I would say the facade of trading is on social media. It's like everybody gets lured into it right for the easy, fast money, and they don't realize like how hard and difficult it is at times. And it's not like it goes away. It doesn't go away because nobody wants to admit that they are.
You've heard his story before, but here's what most people miss. He actually became more consistent when he stopped listening to his mentor. That's when his trading really transformed.
If you're trading at a specific size, say, I'm going to trade one micro contract for the next 3 months. And if I can't stick to that specific size, then I have a discipline issue, which I really had to do that. I really had to work on that. Big part of trading is knowing how to position properly, knowing what size to take. And, you know, everybody always comes out to me and asks me, when was it when your trading clicked? And I would say
he went from construction worker to one of the most recognized prop firm traders in the world. This episode isn't about payouts. It's about consistency. It's about independence, and it's about learning to execute under pressure.
The biggest differentiating factor is that you need to separate trade signals versus trade advice, because the hard truth is that
I'd love to get straight into conversation if you don't mind.
Yeah.
I have something noted down that I saw, something that you said online that kind of stood out for me a little bit. And I think it's a good point of conversation to kick things off today.
Yeah.
I heard that you mentioned at one point that you became a lot more consistent with your trading when you stopped listening to your mentor. Mm-hmm. And I thought that was a pretty interesting take, because I think in today's day and world, most people are seeking the right mentor. They're seeking the right information. Why is it that you feel like that was such a big turning point for you?
Well, I think it was outside noise, to be completely honest. I think when you get to a certain point in your trading where you start taking trades that some people in your group, you know, in your circle might be looking at the same setups. And there were times where I was following my mentor and kind of heard trade ideas that he was throwing around, and I would go into that trade and it would stop me out and I would feel bad. But I think it hurt me a little bit because I was kind of using him as a scapegoat instead of taking responsibility for my own actions. So I think over time I just learned that, you know, trading it's a personal endeavor. And I think the more and more you can start moving towards being an independent trader and making your own decisions. And I think that's very difficult to do in today's day and age because everybody's looking on social media, looking online. They're asking people for advice, and they've lost the ability to make decisions on their own. So I think when you mature as a trader, you start to realize like this is an independent thinking game, and I need to learn how to, you know, make my own decisions and, you know, I guess take responsibility for your own actions, because you're the one clicking the buttons. You're the one making the decision. So if you always have somebody that you're looking towards to take trade signals or ideas from, you never really truly learn on your own.
Where do you start to draw that line? Because I come from the approach that I do think it's helpful to have a mentor, a community, the right people around you, especially in your early days, because I follow the philosophy that you don't know what you don't know. Right? Until somebody can kind of guide you and show you that, hey, you're kind of doing this right and you're doing this wrong, I think it's very beneficial to have at the start. But where do you think, if, you know, someone's an aspiring trader, then you into this game, where do you draw the line of to say, I've learned enough from this and I need to kind of start creating my own path?
Well, I think here's the thing. So the first trading conference that I had gone to was probably 10 years into my trading career. And then now looking back, I kind of regret not reaching out to other traders and being part of that community earlier. But I think the biggest differentiating factor is that you need to separate trade signals versus trade advice, right? So being part of a community and growing with like-minded traders is extremely important. I wish I had done it sooner in my career because it took me 10 years to meet the first trader in person, other than the people that got me into the markets. So I don't understand why I waited that long, because we bounce ideas off each other. We're going through the same struggles. I don't take trade advice from them, and usually when I do, I usually end up losing money. But it's important to grow with a community of like-minded traders. You know, we're all going through the same struggles. A lot of the advice that you've heard before is still sage advice. Like, traders still struggle with the same issues for the past multiple centuries, 100 plus years. These traders are dealing with the same issues that we're dealing with right now. And I don't think anything about the markets is going to change unless you can remove the human condition, which is probably impossible unless you're automating systems, which I think, has its place. But for most people out there, as a discretionary trader, they have to make their own decisions.
That's a fair point. I mean, I got into the game quite some time ago, 2012. So probably not too long, around the
like
same
a
sort
year
of time
after,
when we started. But I have a very similar thesis on this, which is kind of like, of all the years that I've been in the markets, I haven't found the statistics for becoming profitable have drastically changed.
Yeah.
And I think the big narrative that's thrown out online, or at least this was the perception that I had, it was always about that there was a missing piece to the puzzle or a bit of information that I didn't have that I thought I could find from the next community, the next mentor, the next strategy that you would buy, something like that. But I think today's day and age, as you kind of pointed out, is like we live in an era where it's never been easier to connect with other people. It's never been easier to acquire information. But that should kind of let the light bulb moment go off for a lot of people to understand that there's more to this game than just what happens on the charts.
Yeah.
Right? I know you're someone that's very big on the idea of working on kind of the inner game as much as the outer game. What's that journey been like for you?
It's been interesting because, as you probably know, usually when you first get into trading, you hear all these different concepts like having a strategy, having risk management, having psychology. Usually at the back of that list is psychology because nobody really pays attention to it until they find out that it's a big issue. And I think that progression took me a long time to understand. I thought, the first 5-10 years, I was strategy hopping, trying to work on my risk management and everything. Because the hard truth is that when you start diving into psychology, those are the hard things to address as part of your personality. Because nobody wants to admit that they are impatient or that they get angry or that they're greedy or, all these various things. And it takes time to want to change. I think a lot of people, outside of trading, let's just scratch trading for a second and look at people that have a hard time changing their personality. There's something deeper at play there, whether they're in denial of whatever condition that they have, or they just simply can't change as a person. That is a human condition, and that's something that affects trading, but also other aspects of life. Like, take, for example, somebody that's addicted to alcohol. A lot of times it's a personality flaw than it is more, a substance addiction. And you have to kind of dive deep into those root problems and figure out what is actually causing me to want to drink. And a lot of times, a lot of those people have trauma from earlier, in their past life that they're carrying along with them that they're not addressing. And subconsciously, they're falling back into the same habit and the same cycle, and they just can't quit.
I find the mindset of, forget again, trader for a second. I find the mindset of a human being very, very fascinating. How we get to where we are today, the reason why we think, feel, and act the way that we do, it all stems from a byproduct of a belief, an experience, something that you've grown up hearing. That, again, a lot of people, as you correctly said, they don't really pay attention to, but it plays a huge part of what influences all of our day-to-day actions. And as part of what we're doing as aspiring or consistently profitable traders, this is something that we really have to be mindful of.
And it's hard because sometimes you're doing things subconsciously. I actually had this discussion with Randy Howell. I've been talking with him. He's working with me on my trading personally. And he had mentioned that there was this one trader that he had, a really great guy, was managing a personal account of multiple $100,000. And every time he hit $1 million, he would kind of hit a ceiling and then come crashing back down. Without realizing when he was younger, his father, I guess, was kind of just like a blue collar man. And he would always kind of say, nobody's worth $1 million. Nobody's worth $1 million. And that kind of subconsciously planted that seed in his head. So every time he reached $1 million, subconsciously he was self-sabotaging. And I've been through that journey as well, because I came from a family that was kind of middle class. I mean, it's not like we were rich or anything, but we were decently, comfortable.
Yeah.
But they weren't exposed to wealth and affluence like that. So I have in my mind, I had to kind of break through that barrier to understand, like, hey, there are people making a lot more money than just the average person out there, but it's a very small percentage. But I don't think a lot of people recognize that sometimes subconsciously there's something holding you back that is deeper, and
100%.
you can't see it at surface level.
Yeah. I feel like this becomes a lot more prominent when you start actually looking at this in the perspective of what we're talking about here, which is the prop firm space. Largely because one of the topics of conversation that I've constantly been coming back to during these episodes is actually the barrier to entry for trading has never been smaller.
Yeah.
Right. It's never become an easier time to transition into at least wanting to become a trader. But I find as much as prop firms are a massive benefit, there's also a lot of psychology games at play that not a lot of people are prepared for.
Right.
You're someone that's obviously played the game quite well. You're well versed in the kind of field of prop firms because you started off with CFDs, right?
I started off with my personal account, and then
Okay.
I started out with, CFD prop firms,
And then
like 10
transitioned
years
now.
into my career. Yeah.
Right. So then transitioned into mainly what you do now, which is futures. How have you found the psychology differences between all of those? So going from personal to CFDs to futures, what's that been?
Well, I
like?
guess let's talk about like the timeline of trading in general. Back in 2011, 2012, getting trading education was nearly impossible. Like the stream of information was slower. You were just on a forum. People weren't posting on YouTube. You couldn't see people live trading their executions. Very few people were actually screen recording what it looked like when they were taking a trade. So I think now it's great, but now there's almost too much information, and I think that can be it can hurt you as a trader when there's way too much information online because there's just noise. There's a lot of noise. So as a trader in today's day and age, even though the access is easier, it can be much harder. So when I was going back to the original topic, I started out in a personal account, right? And I think a lot of traders just have an issue with capital, and they have an issue with the size that they're trading because at times it feels like it's not enough. And it's hard to internalize. And I've had this discussion over this past weekend. When you're taking a trade and you're making, let's say you're making more than you would at a 9 to 5, at times it feels too easy. So subconsciously, you kind of self sabotage and say, I didn't work hard enough to make that $1,000, even though that $1,000 was made much faster than your job that you work 9 to 5. So it's hard to internalize just from a trading perspective. And I've had to go through that journey throughout my entire career. But when I found the CFD prop farms right before COVID, or right around COVID, I looked at that opportunity as kind of my golden ticket because up until that point, I was working a decent job, but as most of you guys know, it's difficult to save up for a personal account, a sizable personal account that is actually going to make a difference in your life while you have all these other expenses. And for me, I had a mortgage payment, I had a wife to take care of. I was putting money into my retirement account because those were safer than putting all my money into a trading account, which I would say, 80% of retail traders are probably putting all of their liquidity into trading. And that increases the level of pressure that you have. So by the time I got to the CFD prop firm space, I was already making really good money and I was focusing on my career because that was the one thing that was paying the bills. So over time, I started making more and more. And I was in a comfortable position enough to take the risk on prop firms. But again, I still didn't have the capital. So when I looked at CFD prop firms, it was leverage. That's what I was looking for. I was looking for the leverage. I was looking for the capped downside. So if I lost an account, it wasn't like I was losing $20,000. But at the time, I was buying 200K FTMO accounts, and you had a 10% drawdown. So when I saw that, my eyes lit up. I was like, this is like the jump start that I really needed. So because I had already had 10 years of experience going into the space, I was able to manage the risk effectively because I had already been through so many ups and downs of my trading career that I had the basic foundations. So there are different ways that you get into the space. Either you're brand new and you don't know how to trade and you go into the prop space and you're using it as an educational tool, or you have a skill set where you can, leverage that in the prop space. I think both are beneficial, but where it gets really hard for people is that they're spending money that they can't afford to lose. And that's a dangerous side of the trading space. So, all of that experience had led up to some really big payouts. And I think delayed gratification is a big reason why I'm in the position I am today, because I wasn't just going out and spending the first large payout that I got. I wasn't buying a watch. I didn't have a nice fancy car. I took all that money and just kept reinvesting it into my trading business and reinvesting it into my trading business until I got to the point where, okay, I have way more than I need. You know, I can buy things 3, 4 times over. Now I can enjoy the money a little bit. So I know that there's a lot of young guys that are getting into the trading space right now. And the first thing that they do, I see it so many times. I see a young kid going out and buying the supercar. When I know they probably didn't get financing for that, because the supercar game, when you're trying to buy something like that, you don't have any history. Like, that's your first car, you're going to have to put down 50 to 75%. Okay. Even for me, I have good credit. I have multiple properties. Like, my first supercar purchase that I had a hard time with financing because they were like, this is the biggest auto loan that you've had, right? So my previous auto loan was like 80K. I'm trying to get financed for 200K. I have to put down a lot more. And as a young person, as somebody that's trying to build a wealth and not just be like a flash in the pan success, you have to take that money and be wise with it, because you don't want to just pay for things that you can't afford. Your trading performance goes down the drain, and then all of a sudden you're in a tough position where you can't make it work. So that's kind of been my whole journey, is I've always put off buying something or doing something with the money and just focused on trading, right? And used the payouts to roll into more accounts and get more funding and more capital and build up my emergency fund so I can afford to buy more accounts and take the risk that's kind of required to hit some of those big payouts. Because I'll be honest, the run at Apex, a lot of people won't be able to do that because they see the money and they're like, you know, they're kind of like a deer in headlights. They can't fathom, or they don't have the threshold, the risk threshold, the comfortability with large amounts of risk. So when they see that money, even though it's not in your account yet, they're panicking. So you have to build your way up. I didn't just get here overnight, right? Like, I wasn't comfortable risking $20,000, $40,000 a trade instantly. I started out with $10, you know, $15, $25 per trade. And I'm sure you probably started out the same way.
Yeah. Okay, let's take a quick break here, and I want to tell you about a prop firm that's actually trusted and proven to pay their traders. There's only one name you need to know about. It's Tradify. You see, Tradify Futures is one of the most trusted names in the industry. They've had consistent and stable operations over the last few years, and they've paid out over $125 million to traders. The best part about doing business with them is there's no hidden rules. There's no denied payouts. As long as you hit your objectives, you get paid. It's pretty simple. Now, here's what Tradify gives you that actually matters as a trader. They've got flexible plans in place that you can get paid out daily. You've got the ability to pass evaluations in just a single day. And if you don't even want to mess around with evaluations, they've got instant funding plans as well. Honestly speaking, their dashboard is one of the best in the game. They've got an inbuilt journaling process that allows you to trade, track, and improve your results over time. That's how real consistency is built. Now, before we get back to the episode, I want to share a massive update. Tradify Crypto has officially launched. This is going to give you better pricing for crypto-funded accounts. And you're also trading with institutional liquidity from exchanges like Binance, OKX, and Bybit. This is honestly giving you the best trading conditions possible. On top of that, the payout setup is simple. On-demand payouts. If you hit your objectives, you get paid. It's as simple as that. I personally think regardless of whether you trade futures or crypto, Tradify is the move to make. Now, make sure you use the code PFT at checkout to make sure that you get the best deal available. Links in the description below. I always like to think of risk management. I use a lot of analogies and compare trading to health and fitness because I think they have a lot of overlap. You can't rush the process, and either of them.
When you go to the gym, you can't squat 300 pounds if you've never squatted before.
100%, right? So I use the same thing. I talk about it in terms of bench press. I say if your goal is to bench press 100 kg and you've never done it before,
most people are better off just bench pressing the bar.
Yeah, 100%.
Right?
100%.
Or squatting with the bar. Air squats. Make sure you get good depth.
Yeah.
Like, you know, take it as slow as possible.
The thing that I like about that idea is that even after 3, 6, 12 months in the game, you may have perfect form. You may have increased in weight that what you were lifting before. But it doesn't mean you can instantly then go from 50 kg to 100 kg.
Exactly.
You still have to have that progressive overload.
Yeah, and I went through those problems because I was the trader that tried to scale up too fast. I was going from $50 positions and I'd have a big win, like $300, $500, and then instantly go to $250 risk without realizing I don't have the mental edge to be seeing the P&L fluctuate that much. And it's that comfort zone that you're always pushing as a trader. You know, when you hit a certain level, look at a guy like Umar Ashraf. Do you think he got there overnight, risking that size? It doesn't happen overnight, and you have to like slowly, or at least plan a way to scale up. So, if you're trading at a specific size, say, I'm going to trade one micro contract for the next 3 months. And if I can't stick with it to that specific size, then I have a discipline issue, which I really had to do that. I really had to work on that because my position sizing was inconsistent. And that is a big part of trading, is knowing how to position properly, knowing what size to take when your A plus setup appears, and knowing when to back off when you don't feel as confident.
Yeah. I often find that some of the most difficult advice to give to a trader, which is you're risking too much, you need to size down. And I always get the same response back, which is, well, if I size down, then when I win, I'm not going to make as much money as I would like. And the question I always say is, are you making as much money as you would like now? Because you make some and then you give it back and you end up in the same cycle all over again.
Yeah. Well, trading is not, and it really is a paradox. Trading is not about money. Trading is about following a process. So if you can't follow a process on the smallest size, you are not going to be able to follow that process on a larger size. And that's just point blank, period. If you can't manage $1,000 in your bank account, what makes you think you're going to be able to manage 10,000 or 100,000? And I've had to learn that along my journey as well, because I was never good with money. When I was younger, I was spending my money as soon as I got it, like buying clothes, going out, and just, I don't know, doing stupid things with it. You have to learn how to manage it properly, and that takes time as well. And some people's relationship with money is just poor.
Yeah. One thing that you said on the topic of managing money is you talked a lot about delayed gratification.
Yeah.
Is that something that you feel like you always had, or was that something that you had to forcefully instill into yourself?
I had to forcefully instill it. I think it was probably in my mid to late 20s, right around the same time I got engaged. I really had to try and learn how to save money and not go out and spend. So I think one of the biggest things was I wasn't traveling internationally. Like a lot of my friends, I would see them go on vacations and everything, and I basically just stayed home to try and save for my wedding and save for a down payment on a house. And I had to learn how to budget properly because, I think when I was younger, going back to me spending all my money very quickly is because I wanted instant gratification. So it was always instant gratification, but it was hurting me long term. And that was just, instant gratification is just, it's a short term mindset. Instagram Reels,
100%.
YouTube Shorts, instant gratification.
Yeah.
Trading in general, people want instant gratification, right? They want the strategy that's going to make them profitable tomorrow, right? Not 3 months from now, not a year from now. They want something that works right now.
Yeah.
And everybody was, even for me, I was searching for the light bulb moment. And, everybody always comes up to me and asks me, when was it when your trading clicked? And I would say, I can't tell you.
Yeah.
And most traders can't tell you because it's a gradual process. It's like you unlock one door and there's another door.
Yeah.
Right. So you learn something about yourself or your strategy, your system, and you're like, oh, that's an aha moment. And then there's another door that's has another secret behind it.
I resonate with this a lot because I think, especially in my first few years where I never took this game seriously, I had that feeling as well. I thought that at some point it would get easy. I would understand the market.
Right.
And then the market would just become this kind of ATM that you could just print money whenever you like. And I think the hardest part is understanding that, sometimes you're going to do everything right and you're still going to suck.
Exactly.
And that can last for periods of time. And it's difficult to explain to someone, especially people that are maybe don't have too much experience in the game or don't understand trading entirely. But when they ask for that moment where it's like, where did it click? Or when did you become profitable? And I try and explain, like, it's not a switch you flick. Like, even when you're profitable, you'll still go through patches where you lose money.
Exactly.
So it's like, how do you differentiate between the two? Like, how do you figure out this is a profitable trader that's just going through a streak of losing money, and this is someone that is not making any money at all?
Yeah.
How would you split the difference between those two?
Well, I think you kind of just said it. Like, the seasoned veteran traders know that trading is streaky. They know that they go through rough patches. And the interesting thing is being around some of these more seasoned guys, and I still hear that they have tilt days. I still hear that they're struggling, and I still hear that they are trying to, I think trading, you learn something new about yourself almost every single day.
Yeah.
And that's kind of what the, I would say the facade of trading is on social media. It's like everybody gets lured into it, right, for the easy, fast money, and they don't realize like how hard and difficult it is at times. And it's not like it goes away. It doesn't go away. You go through a rough, like right now, the markets are chopping sideways on me, and it's very, very frustrating. Like I take the trades that I know I'm supposed to take, and they just don't work. But I think it's okay, right? It's still frustrating. I'm doing what I'm supposed to be doing. I'm following my plan, but I still lose money. That is what you have to deal with as a professional trader. Is that you go through streaks. It's not everything's fine and dandy all the time. And I think most traders, when they first come into the game, they have this unrealistic expectation that, again, like what you mentioned, that there's this switch that they can just flip on and off, and you can't do that.
Yeah. I think a lot of the problem, and I use this lightly because I have maybe a mixed feeling about this, but I think some of the problem really roots back to social media.
Yeah.
It's the impression and the expectation that people have sold by people that are just selling the dream. And I've got a massive dislike for people that don't paint a real reality of what the game is like, because it's not all sunshine and rainbows. It's not you're on a beach today and you're clicking a few buttons and you're making millions of dollars. That journey is never like that for most people. And I think a lot of people have to come in, and you said it correctly, with this, which is you have to have the right expectations from the get-go.
And I also think that there are legitimate traders, but when you go on their social page, of course it's the life, of course they want to post the lifestyle. But if you were to be with them day to day, they're probably not doing that. It's probably some highlight. You're seeing the highlight reel of some of these people's lives. But from the day to day, they're probably locked in a room for 8 to 10 hours, trading the markets or working on their business, right? And then you're seeing the highlights. So it's a very small percent of their daily life that they're showing you on social media. Because even for me, I don't want to let people into my life, my whole personal life. So what you see on social media is just a very small percentage. My Ferrari, for example, I drive that one time a week, right? But you probably see it on social media and like, oh, this guy drives it every day.
Yeah.
Not true. I'm in my office, I'm working, my head's down, and I'm really just focused on trading for the most part. Yeah.
There's a beautiful quote, and I know I'm going to butcher it before I even say it, but I think it was said by Jimmy Carr, and there's been variations of it by many different people. But it's all revolves around this idea that everyone wants the things that you have, but nobody's jealous of how you got there in the first place, right? And I think that's true of a lot of what we've spoken about with like the people that have actually made it in this game. It's very, very rare that I've heard a story where it's happened overnight. There's always been the failure, the setbacks, the sleepless nights, all of those sorts of things. And I'm sure, someone with your experience has been through many stages of that. For the person that's watching this and they're still in that phase and they don't have that light at the end of the tunnel yet, what would you say to them? Like, how do you guide them through that process?
Yeah, so I actually saw something on social media the other day. It was School of Hard Knocks, and you know what he said? He said, everybody's addicted to information, but allergic to execution. And that, to me, is so, so powerful, is that you can consume as much information as you want. You could go spend hours and hours and hours on my YouTube channel, on anybody else's channel, but the real hard work is actually sitting down and applying what you've learned. And that was a big enlightening moment for me as well through my journey, was because I spent so much time, probably way too much time, trying to educate myself about the markets instead of actually trading the markets. Like, yes, I was still taking trades, but I wasn't focused on what I was doing wrong, like how to position myself accordingly. And every time I got stopped out, I would go straight to YouTube or another piece of content and try and figure out what went wrong. When in reality, everything that I needed to know was already in front of me. Yeah. So I think that's a big thing, is stop consuming so much information. And that's, again, a downside of what we're seeing right now, is that there's so much access to information that it's almost causing like analysis paralysis. Like, it's too much information. It's a good thing and a bad thing. You have to use it wisely. You have to make sure that you are limiting yourself on how much knowledge you're going to consume. Find something that works, that you can repeat, and then just focus on self-improvement. Because I think if you just really try and dial in and figure out what you're doing wrong from a mental standpoint, I think you'll probably find a way to make that strategy work.
One thing I do also want to run by you, because I think you'll have a really interesting insight on this, is the industry in its entirety. You've obviously been someone that's seen the industry change, evolve. We've seen prop firms come and go. What's your thought on the industry in and of itself? And are there things that we should be observing, looking for, that are going to help us to play the game of prop firms to do really well in them?
Well, I think the industry is growing a lot. I think it has grown a lot, and it's still growing. And you have to look at those opportunities as their leverage opportunities. I think too many people probably put all their eggs in one basket, and they complain when the firm goes down or when they break a rule. But this is a business, right? You have to understand that this is a business. You are expending capital for an opportunity to get leverage and to make some money. As with any business, you're going to have expenses. Okay. It's just because you put money into that account and buy that funded account does not mean that you're going to get a return out of it. You have to treat it that way. And when you're first starting out, you want to make sure that you're protecting the accounts. Okay. Get some payouts, make sure that that money actually hits your account, because there's no guarantee that these firms are going to be around tomorrow. And that's how you have to navigate a lot of this industry, is that there's a risk with what you're taking, right? You're paying for an evaluation fee without the promise of being paid out at the end. But the ROI opportunities that's across the industry with trading prop firms, it's high. When people ask, why do you trade prop firms if you could trade your personal capital? Well, it's the ROI. It's the leverage opportunity. I can't put $1,000 into my personal account and get $150,000 in margin. Right? That you can do that in a prop account, right? But I think the shift that the industry maybe needs to see going forward is, how do we get to the next level? Right? There's a lot of retail traders that are doing really well. Some of them are gaming the system, though. Some of them aren't really getting better as a trader. They're just gaming the system because they know if they spend X, if they hit one big payout, they can get a return for over here. But they're not improving as a trader. So, let's say if these firms disappear tomorrow, not only be the bearer of bad news, but playing devil's advocate. If prop goes away tomorrow and you haven't become a better trader, you've essentially wasted your time. So you have to look at it and if you understand that you're trading differently on a prop firm compared to a personal account, that's great. But they have to understand that maybe I'm building bad habits here that aren't gonna serve me in the future. So I think looking forward, the industry is in an interesting spot right now because there's a lot of moving parts. It's constantly changing. I would like to see the industry start moving more towards the traditional route of prop. Getting the top talented traders, improving on their skill sets, working with them. Maybe the firms want to work with some of these top traders and improve their skills, and then really give them capital.
Yeah.
Back, behind them.
Yeah. I really think the prop game, as you said, when you look at it from an ROI standpoint, it's really a no-brainer as to whether people should be getting involved, right? When we think about diversification, when we think about ROI, there's a lot of good reasons to be in the game. But I think a common trap that I see a lot of traders make, and you kind of lightly brushed on this a little bit, which is, I think traders, especially in the prop space, they get addicted to hitting reset. Yeah. And it's something it's a habit that you will build that will never pay any returns outside of the prop space. Right. Because you start managing your own capital or investor capital, and there's no reset.
Yeah,
you can't lose
exactly.
10, 20, 50% of your account and be like, hey, do you want to just top this back up to starting point and we go again, right? And I think this is one of the, I don't want to call it a downside of the prop space, but I think it's more so a reflection of the users that are getting in. They're either not coming in with the right expectations, and they're not focusing on, I think, the core thing which you touched on there, which is you actually improving as a trader.
Yeah, and some of them don't even have money because you can buy it on a credit card. When you first started, you couldn't deposit into your broker account with a credit card. It's dangerous to play that game. Again, you have to learn how to manage your money better, because if you can't do that, you're never going to stand a chance in the markets ever, because there's too much pressure. You're under too much financial pressure to make this work, and you can't let a trade run. And you're mismanaging it. You're trading too much because you need that money to pay off the credit card bill that you can't afford.
Yeah, it's a vicious cycle. Yeah. What would you say to the person that is starting out, has a little bit of money, and wants to play this the right way? Understanding what we know about the opportunity that's presented in the prop space, how would you go about actually starting things off on the right foot, both in terms of execution, in terms of like buying accounts, as well as the mindset going in?
Well, obviously, I would set it up just like I did. I would set up a business, right? Because once you set up an LLC, it doesn't cost a lot of money, at least here in the States. Set up an LLC, open up a business line of credit, so a credit card, but have the money to pay off the business credit card, okay? And treat it like a small business. Let's say if you wanted to start an online shipping, drop shipping business, you might need $5,000 for inventory. Just say you're going to start with $5,000. At least if you do it on a business credit card, you can track your P&L. You can track your balance, profit and loss of your specific company. Like separate your business finances from your personal finances, right? That's the first point. The second point is knowing that you have capital expenditure to get this business up and running, right? Limit yourself, okay? Limit yourself to how many accounts you're going to buy. Don't go overboard. If you're going overboard, you just have a discipline issue. And until you can generate a proper ROI from one account, don't buy multiple accounts. Okay, start out with one. Prove to yourself that you can actually, that this is actually real, first of all, because when I first got into FTMO, I didn't know if they were going to pay me out or not. I wasn't going out and buying all the other accounts that were out there. I just focused on one firm. As soon as that money hit my bank account, I knew this was a real thing, right? When you're first getting into it, you don't know if this is real. You don't know if everybody online is actually making the money. But when you get that first payout, you're like, okay, this is actually real. I've actually used my skill set to make this money. Then you can start growing and scaling the business. Okay, you can start diversifying into other prop firms, because I've been in situations, and there are firms out there that have gone under that have owed me $50,000, $100,000, and that does not feel good. But when I look at it from a cost perspective, I've lost $2,000 with them. It's unfortunate, right? That's the game we play. But again, these businesses, these prop firms, they're cash flow businesses at the end of the day. If there's not enough traders paying for the accounts, if they have traders on their books that are making money, let's say if the revenue dries up from people signing up the next month and they still have a liability to pay these traders out, that firm's going to go away. So nothing is guaranteed, right? So you have to look at this like, I need to diversify. I can't have all my eggs in one basket. I need to trade with other firms. Maybe I need to look at different markets and really try and protect your downside, because that's really all you can do as a trader.
Yeah, I really like that, because it's a lot of the advice that you gave there is centered in around the stuff that needs to be done even before you place your first trade.
Yes. Yeah.
Right. And I think that's where a lot of traders go wrong. Like their first starting point is everything that they need to enter the market with the perfect entry.
Yeah.
Well,
you need a business plan. You need a business plan.
Yes.
If you don't know what you're doing, and I learned this, I was a bad student, by the way. I was probably a B student at best in college. They forced us to write a business plan. Most traders don't have that because, and this is something I learned in business. Usually the lower barrier to entry, the harder the industry is for you to make it. With trading, there's like no barrier to entry. You could download the app on your phone. You could pay for a challenge account, and you're trading in the next 30 seconds. Zero knowledge, zero licenses, no permits, nothing.
Yeah. It's
Right.
wild when you think about it in that respect, because what other job or profession would allow you to do that? Zero.
Yeah.
And what's worse is people actually come into this game with zero
Gambling.
experience. True.
Gambling.
True. But I think people come into this game with no experience, but they also think that they're going to excel from day one.
Yeah, which again, if I could go back to my previous career, I don't think I would have changed anything, because I learned so many essentials about business and how to operate properly, risk management, just managing a budget in general was extremely important to me.
100%. 100%. You need the #1 trading tool for traders. Introducing TradeZeller. It doesn't matter if you're a Forex trader, a crypto trader, an options trader, or even a futures trader. TradeZeller is for everyone. To be profitable, you need to have an edge. TradeZeller allows you to identify, manage, tweak, and refine your trading edge. You can connect unlimited accounts to TradeZeller. It will pull all of your data onto a dashboard. It gives you in-depth analytics, and this makes journaling so easy. You can add playbooks, trade replay, full back testing, all in one single tool. By using TradeZeller, you'll not only understand all of your trading data, but you'll get feedback on exactly what's working and what isn't. Use code PFT for 20% off the yearly subscription, or PFT10 for 10% off the monthly. Try it out and watch your trading transform. One thing I saw you I think you tweeted recently. You were talking about the opportunities that have, I think, been better for you since switching to futures, right? Transitioning away from primarily FX, I think, which you used to trade some time
Yeah.
ago, and coming into the future space. And I remember when that transition was happening, especially for a lot of traders in the US, when MetaTrader was no longer going to be available and their
Right.
only option to continue was going into futures. What was that like for you? Because obviously, up until that point, your whole trading career had primarily been around like CFDs and FX and
Yeah.
things like that.
Yes, correct.
Did you feel like everything was coming to an end and it was, ending before it had really begun?
Well, a big reason was they stopped allowing U.S. traders. So when I looked at that, I was getting cut off. And as a trader, you kind of have to adapt to any situation. So either I roll over and just, I guess, stop trading, or I go into another market. And I was kind of like forced into that market. It wasn't a bad thing. I saw Trader Kane hit a $2 million payout, and I said, I can do this too. But the transition was pretty difficult because it was a market that I hadn't really traded before, and the volatility is different, so it moves differently. So what I had to learn was I can't really swing trade in those markets too often. They're very volatile, but the risk reward is probably better on a lower time frame because all the volatility comes in at the open and at the close. So one thing that I learned was I was getting into trades too early. The Forex markets were moving at, during London session, 8 a.m., and I could trade overnight. I could swing positions. But that's because of their currencies, right? They're supposed to be stable. They're supposed to move slowly. You're not supposed to see massive 2% days every single day because then the whole global economy, or at least that specific economy, would be in shambles, right? Because their currencies all over the place, too volatile. So moving into a market like futures, NASDAQ, S&P, nobody cares. The market's not going to, I guess, be destroyed if they have a 3% down day. So those markets move around a ton. And as a trader, that's kind of what you want. You want volatility. And not only that, with futures, there's like no spread. So there was no spread that I had to overcome when I entered a trade.
Yeah, I like that. And I asked this purely selfishly because this is something that I'm thinking about a lot myself. I've primarily been CFD since day one, only really trade FX. But you can see statistically that volatility is dying out.
Yeah.
And as you said, volatility is everything as a trader. So I've started to open my eyes to thinking I need to start exploring equities, maybe commodities. I mean, you look at how gold and silver have been moving recently.
Yeah, it doesn't mean that you have to just completely drop Forex forever because I still trade Euro every now and then. But when a market is dead, you should try and find another market,
And I think that's, one thing that a lot of traders struggle with. They go through the debate of, do we become a specialist in one market or do we, build a skill set that maybe allows us to trade a variety of different ones?
Yeah.
And I think you said it really well, which is like, we're traders, we have to be adaptable.
Yeah.
You have to go wherever the money
I think you
is.
want to start out as a specialist and kind of learn the ins and outs of a specific market because once you know how to do that, then you can apply it to other markets. But if you're kind of bouncing back and forth, you're trying to juggle too many characteristics across these different markets and how they operate.
What does that actually look like for you? So when you're thinking about going from one market to another, do you go through a period of back testing? Do you collect data? Do you journal? Like, what does that look like in terms of your process?
Honestly, just live executions, but I'm trading a very small size just to kind of get in sync with it and try and understand how it moves. Back testing is good up to a certain point because no matter how much back testing you do, you can't curve fit it to what's going to happen in the future. There's no telling what's going to happen tomorrow. And speaking of, right, let's talk about the gold and silver markets. Right now, gold and silver are going absolute bananas. I've been trading for a long time. Those markets were kind of sleepy. They were just stuck within a range. Gold was the stable asset. People were putting money into gold when they wanted to hedge.
Yep.
When the market is booming like that, do you think I'm going to touch it? Probably not. Because I know it's just a short period of volatility. Like, yeah, I can go in there and touch it, but I'm used to seeing gold stuck in a range. I'm not going to go out of my wheelhouse chasing a market that I don't understand. Okay, if I wanted to start trading gold, I'm going to spend some intimate time with it and trade a small size, which right now is very hard to do, especially silver. It's hard to trade silver at a small size. One mini contract, in 10 seconds, you'll be down $1,000, $2,000. So if it's a market that you don't really understand and you can't trade a small size, I'd probably just not touch it.
So is there a specific asset class that you would recommend to most like new traders that are maybe not used to volatility?
Probably S&P 500.
Really?
Yeah, ES, yeah. It moves slowly. more slowly than NQ. The position sizes are smaller, so if you trade a micro contract, and it just moves a little bit more, I guess, fundamentally like sound.
Yeah,
Mhm.
fair. I have found that a lot of people in the prop space specifically, they will get attached onto one market and they'll never move away. This is definitely something that I've been guilty of as well. What would you, how would you recommend that someone opens their eyes to the new opportunities of what are available? Like, and I'm thinking along the lines of, I see a lot of traders actually going down the route of crypto in today's day and age. Is that something that you've ever touched before?
Yeah, but not really ended well.
Okay.
Because I'm not trading crypto the same way that I'm trading some of these other markets where I have like a base hit, take profit.
Yeah.
Sometimes crypto, the emotions run high because you see the project, you see the founders, you're like, this thing's gonna go to the moon. So I haven't done too well in crypto, and I would say when you're dabbling in other markets, you could still be a specialist in your one market. The benefit of having a big watch list is seeing where the money is going.
Yeah.
Right, and understanding like, okay, this market is hot. What is the sentiment on why it's doing this? Right. So when all the foreign currencies are going higher, and then you see dollar kind of going lower, and you see index markets chopping or going lower, it's giving you a narrative of where the big money is actually going. And obviously, we saw it go into commodities, silver and gold.
Yeah.
Right. But it's interesting because when you look at that correlation, you're like, oh, Bitcoin should be going up.
Yeah.
But it's not.
Yeah. I always find watching the wider market is a very interesting space. I can't remember where I heard this. I definitely didn't make it up because I'm not that smart or poetic, but they talk about this idea about how money never just disappears from the
Yeah,
market.
of course. It doesn't. It just
Going
rotates
from one place to another.
It just rotates, right? Money's not being added to the market at an astounding rate, right?
Yeah.
So like a lot of the big players, it's not like they're getting $1 billion AUM every single day. They're just trying to manage it more effectively. So they're just rotating that money unless they're raising capital, right? A lot of times some of those funds, they'll raise $1 billion and stop raising funds, right? You get in on the initial round and that's it. But then it's up to them to actually put that money to use. So like, where are they pulling it out of? Well, maybe they're pulling it out of the bond market and they're going to put it in gold, or they're doing something with it, right? Because they're trying to chase yield. They're trying to go to the market that will provide the yield. So again, it's not so much that you need to trade those markets. It's important that you have it on your screen though and understand where it's going.
Yeah. I think this is really important for a lot of, I think regardless of where people are in their journey, they need to understand these dynamics of how the market flows, the importance of market conditions, because it's ultimately going to have a massive impact on your overall performance and your mentality throughout that as well.
And I think that's part of maturing as a trader, right? My dad and my mom used to watch like MSNBC or CNBC like at the close, and I'd just be like, "Oh, what's going on?" And everything ties into that, though. The global economic situations that we're in, the different events that you're seeing, whether it's war conflicts going on overseas, all those things have an impact on the markets, and you can't just be so blindly just glued to the screens. I think it's important to at least have some type of finger on the pulse of what's going on around the world.
How much do you give weight to fundamentals versus technicals?
I use fundamentals when the headlines are really, I guess, intense.
Okay.
Tariff news, the war in Ukraine, those were like major movers. But a lot of times, if I hadn't watched the news, I probably would have seen the move on the charts, because the charts never lie. When there's sentiment bubbling up or there's something going on, you're going to see it in the charts. But it gives you a little bit more conviction to hold a position, to understand that you're on the right side of the markets. But you also can't be fooled by the news. There's a lot of fake headlines out there. One great example is Brexit. When Brexit was going on, nobody knew what was going on. Are they leaving? Are they staying? What's going on? Like, there's a vote today. There's not a vote. And you can get caught off sides a lot by just trying to follow the news. So again, going back to like the first thing that we talked about, you have to be an independent thinker. You have to make decisions on your own, what to believe, what not to believe. Is this person on social media real? Is this person? doesn't really matter.
Yeah.
You know?
I've had that relationship a lot with a lot of the fundamental factors in the market, largely because it's been something that's never been my strong point.
Yeah.
And I think when you don't really truly understand something, it's very easy for it to become a lot of noise.
Yeah,
And that
exactly.
creates a lot of distraction, right?
Yeah, because I've seen bad reports send the market higher. I've seen good reports send the market lower.
Exactly.
Right?
And what you really start to understand, and this is something that I didn't really take on board to begin with, is that a lot of fundamental analysts, it's also open to interpretation.
Yeah, they're like weathermen.
100%, right? But it's no different to the technical aspect.
Exactly.
We can pull up the
We're
same
weathermen
chart.
too. We just try and anticipate what's going to happen.
100%.
We don't know if it's going to happen or not. You know, we could say, oh, it's going to rain tomorrow. I don't know.
Yeah, yeah. Very true. Very true. I've got a little bit of a left field question for you.
Yeah.
If you had to define what a trader's job is, how would you define it?
I'd say risk manager. Yeah. Mm.
I like that. I had a feeling you would probably go that way as well. But I tend to find that a lot of traders, and this is something that I see from more so like a belief perspective, they come into this game and they believe that their job is to know what's going to happen next. Yeah. And I mean, now we're going back to, trading in the zone 101, where you don't have to know what happens next in order to make money. But not a lot of people really understand and embrace that. And again, it comes back to a belief system.
Yeah. And I think being a risk manager goes deeper than just, when people hear risk manager and they're not thinking outside the box, they probably think, oh, he means position sizing. No, I mean, holistically, like you are a risk. When you sit down at that desk, you are a risk. So your personality is a risk. And you have to manage that. So like you're impatient, that is a risk. Okay. And that's something that I had to learn when I went through business. You're writing out your strengths, your weaknesses, the threats against you as a professional trader or a person that's aspiring to be a professional trader. There are risks that are in front of you. These are all hurdles that you have to overcome. Like we mentioned about those aha moments where you open a door and there's another door, right? And that's what you have to manage. As a risk manager, you're managing the capital, but you're also managing all of the issues that plague most traders. It's like, how do I avoid doing this, right?
Yeah, there was an analogy that I heard many, many years ago, and it applies directly to retail traders, those that are just doing this as a lone wolf, from their own house. But I think it fits very, very well. And this person basically described the reason why trading is so difficult is because we have three different jobs, right? The jobs are with a trader, which is the executor, the ones that actually clicks the button.
The analyst.
Then you have the analyst, and then you have the risk manager.
Yeah.
Right? And the problem is, on any given day, they're not always going to agree with each other.
Yeah.
Sometimes the risk manager is going to say, you know what, you've done enough damage. Get the fuck out of here. Go home. Go do something. Go touch grass. Right? But the trader in you is gonna have the itchy trigger finger, right? And you're going to want to keep pressing the button. But I've always found that dynamic interesting. And I try and look at myself through this lens a lot. And I'm trying to understand which person's in control.
Yeah, exactly. Which one is going to show up to the desk the next day? And oftentimes you don't know. I'm sure you're big into like meditation.
Massive.
I think it's a big thing. I think some people, they don't realize like there are different characters that you're internally dealing with when you sit down at the desk, right? We don't know which one is going to pop up. Is it the saboteur, the person that wants to overtrade and revenge trade and kind of blow up the payout right before my payout window?
Yeah.
You're $100 away from your payout target and you just blow it. There's somebody that's taking control of your actions in that specific moment that you have to address. And you can't do that if you're just kind of tunnel vision. You have to take yourself out of your body and observe what is going on here. Like there's something either going on up here. Well, it's definitely up here. Right? It's definitely up here that you have to address. There's something going on and you have to as a trader, I think that most traders, they kind of understand like this is a personal development journey that most people don't really talk about.
Yeah.
Right. Because either you're going to change or not. And for me, I think trading has probably changed my life personally more so than anything else.
Yeah. I always say this as well. I was like, the best thing about trading is the person that I became. Yeah. It was never about the money, not the stuff that you see on social media. It was who you had to become to achieve the things that you want to achieve. I love the fact that you brought up meditation. First guest to do so. I'm a huge advocate of it. What's that journey been like for you?
Well, I never really did it until I went full-time trading, and I probably should have done it way sooner. I think I would have been a full-time trader way earlier in my career. And it was just something that I looked at and said, that's kind of stupid. Like, I don't think this is going to help me at all. But when you spend so much time at the desk and you kind of hear all these thoughts in your head just running amok, essentially, they're in control. They're like, they're having a field day in your head. You don't really recognize that, until you're like a full-time trader and the pressure is really on. And I didn't really look into meditation until I hit a really rough patch. And when I had a full-time job, okay, I had something to fall back onto. So I didn't look into meditation because, all right, well, I had a bad day in the markets. I'll just go back to work. But when I'm a full-time trader, okay, I can't just go back to work. Like, I have to address this right now. Otherwise, I have to go back to work.
Yeah.
And it wasn't until I hit that point where I was like, you know what? I really need to work on this. And I need to, I guess, silence all the voices in my head when I'm sitting at the desk. And I have noticed a massive, massive impact on my trading performance. I'm able to think clearly with clarity and make proper decisions in the moment, which I think is probably the biggest part about meditating. Because when you sit down, when I first sat down, I couldn't sit still for a minute, and I think that's the problem with, social media. They probably are programming us to not be able to think clearly.
Yeah. There was a really fascinating study. Again, I'm probably going to butcher it, but there was this idea of they gave a person a choice to either sit in a room alone with nothing else going on, or to press a button and receive an electric shock. Okay. And people pick the electric shock. Yeah. Which was crazy because it's like, it shows you how little people can stand to sit with their own thoughts. Yeah. Like I said, I'm a big advocate of meditation. I've been doing it basically daily since about 2018. Okay. And very similar to you, it changed my life. I didn't just become a better trader, and that wasn't the reason that I started it. I've just become an all-round better human. And a lot of that is, again, what you touched on, which is the self-awareness. And I think it's something that most traders need, but also most traders lack. And also
learning how to be present in the moment.
100%.
Because when you're sitting in front of the desk and you have all these thoughts running through your head, you're thinking about what's going to happen in the future. What if I get stopped out? What if this happens? What if that happens? It hasn't happened yet, right? Most people are living in the future or, the fear of the past, and they're not present. And this goes beyond trading, right? Everybody's worried about, I need to, think about what's going to happen next month when this happens or whatever, blah, blah, blah. You have to be very present in the moment on what's going on. Yeah. And I think overall, when you can do that, your stress levels go down, right? Your cortisol levels go down and you're not in your head all the time.
Yeah. I always heard it framed most beautifully that there are three keys to a good life. You have to learn from the past, plan for the future, but live in the present. And most people screw it up because they're haunted by the past. Yeah. They're anxious about the future. And as a result of both of those things, they ignore the present.
Exactly. They can't be present.
100%. 100%. So on a practical level, what does your meditation look like? Is it something that you do first thing in the morning? Is it midway during your trading day? And what do you actually focus on when you meditate?
So it's not first thing in the morning. I'll wake up, I'll have a big bottle of water, I'll go on a walk. And then when I get back, I'm usually meditating half an hour before I sit at my trading desk. Or 10, 15 minutes, and then usually before bed.
And when you sit down and meditate, are you focusing on trying to clear your mind? What specifically are you doing?
Honestly, I don't want to have any thoughts in my mind. I just want to focus on my breathing. If I can do that, I know I'm focused. Yeah. And I start thinking about other things, I know I'm not focused.
One of the things that has always been my experience, like I said, been doing this since 2018, and I still have many days where I sit down, I do the very similar thing, which is I choose to focus on my breath, and I'll find my brain at some point, it runs away. Yeah. Gets distracted by something.
And you just bring it back.
100%, right? You bring it back to the present moment, you let that thought go. And I think two of those things together, they really help to make you more mindful, make you more present, and just raise that level of self-awareness, because what you're ingraining into you is your ability to recognize what your mind is thinking, feeling, experiencing, but also developing that skill set of letting that go if it's not serving you in a beneficial way. And I found as a trader, that's actually a very beneficial skill. Understanding the thoughts that are going on in my mind before they become actions, and then being able to let them go.
Well, every trader can resonate with that, because when you're holding that trade, how many you're going through a range of emotions, full spectrum of emotions: anger, fear, greed, happiness, euphoria. You know, you have to find a way to minimize that as much as possible, because oftentimes those emotions cause you to make poor decisions.
Yeah, 100%. I think, I see a lot of people that are constantly focused on the monetary aspect of what they do, right? The decisions that they make on a day to day, the only reflection piece that they have is what impact did this have to my financial account? The account that nobody's worried about is the mental one, right? And like you touched on and you said, your level of mental clarity has a huge impact on your ability to make good decisions each and every day. And so I firmly believe in this idea of like, I don't believe we're all going to wake up and be the world's greatest, prop firm trader just from the get-go. I think you have to prime yourself. I think you have to get yourself into the type of state that you need.
Yeah. So like before and after my big run, I was struggling with my trading. So like before my trading, I was struggling. I had to reset, spend more time with myself, spend more time journaling, and being mindful of how to set myself up for the next cycle of the market.
Yeah.
I had to prepare myself. And a lot of times traders don't spend enough time doing that. They have to, and again, this goes to like a daily thing. Just sit down 10 minutes in your own thoughts, running through how your trading day looks like. Because if you don't do that, you kind of go outside the guardrails and you start doing things that you didn't plan for. And that's all trading is. You have a plan. It's like, how well do you execute the plan? And how well do I avoid all the things that are going to cause me to deviate from the plan?
100%. 100%. Right. Jadecap, it's been amazing to speak to you today. Before we wind down, I want to cover two things that I'm doing towards the end of every episode. One of them, a few quickfire questions. Got 2 or 3 to run by you. And the last one we're calling Confessions of a Trader, which I will explain shortly. So we're going to start with quickfire questions. I got 3 that I would love to run by you. First one, favorite book. It could be trading related or anything.
I got to say Market Wizards. Yeah.
Why that one specifically?
It's a very quick read. It's very easy to read, right? So you don't have to spend a whole lot of time doing it. You could read short excerpts every single day. But I think the most important message that you get from that book is that everybody's trading differently, but everybody's on the same journey. It's very weird.
Yeah,
Right.
Beautiful. Okay, question number 2. What belief do you think most traders need to learn?
I think self-belief. I think you have to believe that that you can do this, right? And I think you have to shut out all the doubt and all the noise, and you have to put your head down and really, honestly, truly work towards what you want.
Nice. I like that. Final one. What lesson took you the longest to learn?
I think money management. I think that was probably one of the hardest things to learn. And not only that, how does my emotions tie into that? When my bank account's up, when my bank account's down, when my trading account's up, when my trading account's down. Because money plays such an important role in our lives, but at the same time, it's not everything. And I think it's never ending, that you're trying to manage, like, what is the purpose of trading in general? Like, what am I working for? Because when you have enough money, you realize that money is not the final end all be all. And it's like, why are we getting into this in the first place? Which is interesting, because most people come into trading for the money, but they stay because of the passion, or because they realize that this is a personal development thing and that they're refining their processes and becoming a better person in general overall.
Yeah, I always like the idea of working backwards, which is identifying what your dream life really looks like and then figuring out how to make that happen. I think most people start the other way, which is, I'm just going to try and make X amount of money.
And then I'll figure it out.
Yeah, 100%.
Yeah. But I think having a why, for me at least, made my trading so much more important, because my why initially was me. It was very selfish. If I look back and think about when did it really start clicking for me, when I really start taking it seriously, was thinking, okay, 10, 20 years from now, maybe I have a family, or I want to take care of the rest of my family, right? My nieces and my nephews. I have to take this thing seriously. Like, I cannot go off the guardrails, because they rely on me, right? So I think the why has to be deeper than just, personal gain.
100%. I love that, man. Okay, so last thing I want to run by you before we wrap up. Like I said, we're starting this segment, which I'm calling Trader Confessions. And the idea behind this is to share a message, a story, an idea. Eventually will be submitted by the audience, those people watching, and we're going to share them with one of our guests.
Okay.
Today, I've come up with one that I think is very fitting. And again, this is based on conversations, experiences that I've had with traders that I think are going to make for interesting insights. And all I want from you is honest reactions, maybe advice, thoughts, lessons that you can take away from that. So today's trader confession is, I know my edge is waiting, but I hate it. I'll sit there for hours doing nothing, and then I miss the move that I was waiting for, and it sends me in a spiral. I either start forcing trades to make the day feel worth it, or I walk away feeling frustrated and I feel behind. I can't seem to win.
Okay, sounds like me. Did I submit that? I don't know. I mean, I guess the biggest piece of advice is that this is the long game, right? And that's a very short-term mindset to have. Like, I missed this move. There's never going to be another move ever again, right? The markets are always trading. They don't care if you missed your setup or not. They're going to be moving tomorrow, the next day, the next day after that. So you really need to look at it and say, okay, just because I missed my opportunity does not mean that the bus just stops driving on the same route. The bus is going to show up every single day or every single week at the same time in the same spot, and you just have to take advantage of it. So you really do need to. There's a book, right? Thinking Fast and Slow.
Great book, Daniel Kahneman.
Yeah, extremely important that you understand that this is a long game, and you have to get out of the short-term mindset, because what's driving those decisions is very short-term things. Like, I need to do this, or I need to buy this car, I need to get out of my job. You're not thinking long-term enough. And I totally get where this person is coming from, because I was there. I needed to get out of my job. I hated my job. I needed to get out of there. I was forcing things. And every time I missed a move, set me back from that goal. And that's what causes a lot of traders to keep running in place, unfortunately. Honestly, it sounds weird, but the less you care, the more money you're going to make. And that's just the honest truth.
It's one of the biggest paradoxes of trading, but I think the most important lesson.
Yeah. Tom Dante mentions all. I think he had mentioned, the people that make the most money are the people that don't need money.
Yeah, 100%. I think I remember sitting in on one of his Edges for Ledges camps.
Yep.
This is no plug or promotion by any means, but he constantly talks about the idea that the reason he has so much edge in the market is because he shows up not wanting to trade.
Yeah.
Right. And that idea always stuck with me. It was like, my job is not actually to be in the market. It's just to sit on my hands and observe. And I only want to be in when I've lost all reasons to be on the sidelines.
He's also probably trading at a size where if he loses, he's probably like,
100%.
I'm losing my hair.
Right. Kyle, thank you so much for being with us today.
Yeah, thank you.
Honestly, it's been a great conversation. Hopefully massive insights for everyone at home. It's been a pleasure to speak with you.
Likewise, man. Thanks.
Thank you, man. Guys and girls, over to you. What was your biggest takeaway from today? What was your biggest lesson? What was your biggest mindset shift? Let us know in the comments below. We're going to be reading every single one. And if you want to take part in the show, if you want to get involved, if you want to send in your trader confession, make sure you check out the description below so that you can submit yours and you'll have your 2 cents on these episodes. If you enjoyed this episode, make sure you like the video, subscribe to the channel to stay tuned for more episodes into the future, and check the screen. There's more episodes available for you guys to check out. I'll see you in the next one. Take care.